Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Monday, 15 December, London Open Prep. Let's start with what's moving markets this morning. The yen is firming as expectations build for a Bank of Japan rate hike. Precious metals are catching a bid on U.S. rate cut hopes, and softer Chinese data is weighing on Australia and New Zealand. Canadian inflation is the day's main data risk. In Asia, the Japanese yen extended gains, pulling dollar-yen toward the 155 mark. A stronger-than-expected services activity print and a broadly stable business survey have reinforced the case for the Bank of Japan to start normalizing policy at its meeting later this week. Equities across the region were softer, but U.S. stock futures are pointing higher into the last full week of the year after last week's rotation out of the big artificial intelligence winners. Different tone, same underlying debate about rates and growth. China remains the other early driver. November retail sales and industrial output missed expectations. Property stress persists with a major developer still haggling over a looming bond payment. Yet Beijing signaled ongoing support with plans for ultra-long-dated government bonds. The onshore yuan pushed to a 14-month high, but the weak demand pulse pressured the Aussie and the Kiwi, and crosses like Aussie yen slipped. Meanwhile, gold is near a 7-week high, with silver bouncing after last week's pullback as investors lean into the idea of U.S. rate cuts next year. Oil is steadier with a mild positive bias, though the near-term upside still looks capped. In North America, dollar Canada is on the back foot as traders reassess the Federal Reserve path further out. While in emerging markets, the Indian rupee remains under pressure amid ongoing foreign outflows. Turning to Europe, the calendar is quiet, and policy is in watch-and-wait mode. Brussels continues to push on trade files into year-end, and industry competitiveness versus China remains a live debate. Geopolitically, there are tentative signs of movement, with reports that Ukraine could soften its stance on NATO membership as talks with U.S. envoys continue. For markets, any credible path to de-escalation would matter for risk appetite and energy. On market and sector tone, the dollar is mixed, softer against the yen but firmer versus the growth-sensitive Aussie and Kiwi and against the rupee. Precious metals are supported by lower rate expectations, which is broadly constructive for risk sentiment and a gentle weight on the dollar. Energy is stabilizing, modestly supportive for producers, but not a clear trend yet. Looking ahead, Europe's data slate is light, with Swiss producer prices and euro area industrial production, both unlikely to move the needle. The focus is Canada's inflation report, especially the trimmed mean measure, and speeches from Federal Reserve officials later in the day. Also note U.S. equity index futures rollover, and later this week, the Bank of Japan decision. What I'll be watching today? Dollar-yen, looking for a gradual downtrend if Bank of Japan hike expectations keep firming. The Aussie and the Kiwi against the U.S. dollar, where the tone stays soft if China's data drag lingers. Dollar Canada into the inflation print to see if the recent downside extends. Gold against the dollar, where the uptrend is intact on rate cut bets, and dollar rupee to gauge how far the central bank leans against the move. The takeaway: markets are leaning toward easier U.S. policy and a more normal Bank of Japan, while China's slowdown keeps the global growth trade cautious. Optimism, but still fragile. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.